Hello everyone, this is FS Kenny Trade and my name is Kennedy. On this lesson I will be teaching you how to use your indicator on your smartphone. On MetaTrader 4, you can use, there are so many indicators on MetaTrader 4. I'll be showing you how to use the RSI and moving average indicators on your MetaTrader 4 to execute trades. So what you'll be doing, the first thing you have to do, click the F button, which is this one. Click this one. Look for an indicator called RSI. Relative. This is what we are using. Relative Strength Index. You click to it. This one, 14 period. You change it to 10. This one, put it to medium price. Yes, you change it to trade. Color, you can change it to red. Then level, you change it to 20. Description level, change it to 80. Once you're done, go back, press done. Yeah, as you can see, the red line underneath my chart, that is the RSI, relative strength index. What does this do? This indicator indicates the oversold and the overbought on the market, as you can see this side, and it also serves as a support and resistance zone. If you watch here, you can find something relating with this place, which is here. If you draw a straight line, you see they correspond. What actually happened here? There was oversold market, this area here, that is the zone there. The market was going down and you oversold. It came down and it retraced up to this point before it keep going down again. What you should be looking for on your RSI, once you see this signal, because we have 80 here, we have 80 here, we have 20 here, so you have to be very conscious of this. When you see on your indicator is on this line, there's a line between the 20 and the 80. There's a line here, as you can see. This is the 80, this is the 20. There's two dotted lines there where the indicator moves around between them. So once the indicator hits the 20, for instance, something like this, the 20 line, what you will be doing, you will be looking for buy. That means the market is about to buy. Once it retraces down, hits it like this, and goes up a little, what you need to do, bam, you click buy, you buy, you click buy. Then what happened? Let's see what happened. The market bought to this extent. See, look at here, look at the spot here. Remember when I said once it's 20, once the market retraces down to 20, then you buy. Look at the signal for buy here. Then what actually happened? The market keep buying, and decide to take profit, or keep on buying, depending on the pips you are targeting. Then when the indicator is close to 80, this is the 80 line here, this is the 80 line here, this is the 20 line here. So when it's close to 80, what will you do? You will sell. Once it's close to 20, you buy, sell. That is just the basic aspect of this thing. It's not a rocket science. Like what we are seeing here now is telling us that it's going to retrace. Once it comes down, once this thing is coming down this way, look at the last place here. It's likely to come down here. Once it hits this 20 and retracing back this way, that is when you enter. That is your entering point. B, you buy. The market will definitely buy to this extent. Once you see it hits the 80 line and turns back this place toward this extent, wants to come down, you sell. That is how you will keep on buying, selling, buying, selling. As the market is coming down, you buy. It's coming down, you sell. It's going up, you buy. It's coming down, you sell. It's going up, you buy. That's how it works. It's not a rocket science. It's as easy as that. And if you want to know how to detect the trend, there's, in the case of called moving average. Let's go to moving average. What you need to do, see the F button here. Sorry about that. You go to the F button here. That is where you are clicking. You click to this place. Go to the main chart. Click. Look for moving average. Click to moving average. It pops up this way. What you need to do, the period, you change it to 34. You leave the shift to 0. The method, you change it to exponential. If you click, there's different samples. Change it to exponential moving average. Put it. Then the period, the apply to, change it to high. The color here, you change it to red. You change this to 32. The period 34. Method exponential. Close by, high. Color red. Then once you are done, you click this. Done. It's done. As you can see, there's a moving average on my chart. We go back to the F button again. Go back to the F button here. Click again. Go to main chart as previous. When you go to main chart, click. Go to moving average. The period, you leave it at 30. The shift, you leave it at 0. The method, you change the method, which was exponential, you change it to smoothed. You change it to smooth. then apply to change it to high. The high you change it to low. Then the color, this is the color here, you change it to yellow. Then you press done here. Now we have two moving averages on our chart. Lastly, what you need to do, go back to the moving. This is the most important aspect of it. Go back to the F button, go back to the main chart again, look for the same moving average. You change this to 200. You change the apply to, this one, this is the apply to here. You change it to open. Then click done. Sorry about that. You change the color to blue. Now we have three moving averages on my chart. So how will you use this to detect the trend? Let me turn my screen a little bit. Perfect. As you can see on this chart, when the 200 moving average crosses above here, what you'll be looking for, you'll be selling. It crosses to this, to the other two moving averages. When the blue is up, you will sell. What actually happened here? The market sold. When the blue moving average crosses down, look at an example of it here. Example of what I'm trying to stress. This is the blue moving average here. Once it crosses down below the other two moving average, what will you be looking for? What you'll be likely to do? You'll be buying. What actually happen? The market keep buying. So there is two ways you can detect the market. You have your RSI here. Here's the RSI. You have your moving averages. So you can now have these two indicators on your chart, and you'll be having negative. If you know how to use them, it works perfectly. It's cool if you know how to use them. These two indicators are the most used indicator in forex market. So at least if you can apply this and practicalize it more, this will really help you. I hope this will help you more to improve on your trading. Thank you very much. This is FS Ken Trade, and my name is Kennedy. Thank you.